Good morning all and welcome to today's video. So today I have just the one pair on watch and that is Euro Kiwi. So I'm going to break that down for you now, give you my thought process as I always do. And I'm probably going to go into a little bit more detail just because I only have the one pair on watch and I therefore have 20 minutes to break down this pair, give you more of the thought process that goes on in my mind when I'm creating my forecasts in the evening and in the morning. And there's quite a lot to unpack on this one. So I think hopefully you'll learn some valuable lessons. So Euro Kiwi on the higher timeframes, the narrative as I see it on the weekly chart is that we have this 1, 2, 3 touch structure there, which taps into this sharp move up. Okay, I've talked previously when you get these very sharp moves up, followed by a very sharp move down, and the sharp move down has very little pullbacks on the way, and it just sells off sharply without too much pulling back. That's a good clue that there's a lot of liquidity there, and that price, if it taps into it again, particularly if it does so by way of a 1, 2, 3, will sell off with a similar level of aggression as it did last time around. And you can see we sold off with a similar level of aggression as we did there. Okay, we also had that middle section within the structure. Price moves in a fairly parallel manner. There's the structure. So there's no need at this moment in time for us to come all the way back up to these highs because this is a completed piece of structure. Price has done what it needed to do. So then I analyze the next piece of price action. What happens here? We move down, we leave a footprint, we leave a sharp move up followed by a sharp move down. Okay. What happens? We have these structures that we look for again, where the second touch breaks above the first touch, but fails to tap into what was a sharp move up, followed by a sharp move down, giving me a clue that there's a lot of liquidity here. What happens? We then tap into that area, and on the higher time frames, what do we know? We know that we typically break above these higher time frame highs before we see the moves to the downside, as opposed to just tapping into them, which is more common on the lower time frames, although we do actually break above them on the lower time frames, just not as much. Okay, what happens? We sell off here with a fair level of aggression. What happens here? We sell off with a level of similar level of aggression again. Okay, so that is a completed piece of structure, or so we would think. Okay, and what I mean by that is if you just look at how price sold off. So how did price sell off from this area? It sold off by way of this aggressive sell off, but then it pulled back. How much did it pull back? It pulled back about 80% of the move. Now that is not typical. If we're just going to keep going, right? If this is just a break above here, so we have this 1, 2, 3, and then we break above, we don't normally see 80% pullbacks if we're just going to keep going to the downside to potentially take out this low, the start of the structure, which is what we call the 90% rule, because we know if we break this trend line here, we have and we do so impulsively, we have a 90% chance of getting 90% of the way to the bottom. That's not typical. Okay, so what does that mean? Well, that means that we could potentially be looking for a move to the upside, because now, because we've pulled back 80% of the move by way of this high here, that means that we've left a near miss. Okay, so we've near missed to this sharp area of value, which means that price will likely gravitate back to the area. Now, why might it do that? Well, if we just unpack it on the daily chart, what do we have? We have a sharp move down here followed by a sharp move up. What happens? Price comes down to this area. It near misses to this sharp move. Okay. How does it near miss to the area? It near misses to the area by way of a 1, 2, 3 touch structure. Okay. A parallel piece of structure. So what I'm seeing this as is a potential one. It's a bit of a messy one, but this is Euro Kiwi, a 1, 2, 3 to tap into this high again because we near missed to this high by way of this high here. Okay. And then we could potentially tap into this area and then either reverse to the downside or form continuation to move higher. But I'm not so interested in that at this moment in time. Okay. Now, if we just get rid of that, the next thing I ask myself is, how do we approach this area? Nature theory. How do we approach this area? We approached it correctively. You can see it's a corrective move down. We tap into the area, tap just above, and then we move to the upside, okay? One thing, if I just drill down, so on the higher time frames, the next thing I'm asking myself, so if I'm looking for a potential long play to potentially, tap into this high, which this high near miss 2, if we just zoom back out to the monthly, actually, I'm just going to break this down the lower time frames, then zoom out to the monthly. So previously, because I think it'll make more sense, there was a chance that we could move to the downside because we had these sharp moves here and we got to that area structurally, okay? So there was always that possibility that we could move to the downside, okay? However, I was mindful of the fact that we broke out of all of this correction, okay, and we formed a separate structure above it, okay? So if this reversal structure had formed, let's say this whole, if we just take the bars pattern, let's say all of this had formed closer to here and this three touch structure there was just at the end of it, then there'd be more of a chance of this moving to the downside. But this structure here broke out of all of this, which gives me a clue that we could potentially push higher, which we did. So price just completely blasted above here. It did not find enough liquidity at these sharp moves here to send it to the downside. So therefore, the next area of inflection that I'm looking at is this one here. So we have a sharp move up here, followed by a sharp move down. Now, what happens? You might be thinking, well, surely this is a reversal structure here to push lower. Okay. Okay. Well, let's unpack that. Let's unpack this structure here. And if I just get rid of that off of the chart for a second, right? Now, if this is a reversal structure to push, if I just rein this in a second. So if this is a reversal structure to push lower, I'm talking like longer term, we don't normally see volume like this in the middle, okay? What we would normally see, we'd normally see something, with less volume, okay? Like that, okay? So that gives me a clue, particularly if we just analyze, we dissect this. So what do we have here? We have this area of consolidation. We move up sharply, we come back down, price taps into this sharp area, it moves back down. Look how sharp this move up is, okay, which near misses to this area of consolidation where price moved up sharply. We then come down, we near miss to this area, we move up sharply again, we move down, we near miss to this low and this area here, and we push up sharply. Okay, then we break above, come back down, and that gives me a clue that price is gravitating towards these sharp lows, which this area of consolidation here, because we keep near missing to it, and these sharp moves up give me a clue that a lot of liquidity is in this area for a potential move to the upside. And what price might be doing as well, it might be retesting the back end of this, because this was a very sharp move followed by a sharp sell off. Okay, so price might be tapping into these. Price will always gravitate back towards the sharp areas. Okay, so if it's gravitating back to here and we have all these sharp moves, okay, and we're potentially retesting that, then this could make this very lucrative for a long position to take out. If we just zoom back out, to take out this high here, which this one near missed too. Now, I wouldn't anticipate holding all of that in one go. Okay. The next thing I ask myself is, okay, how do we approach this area? Okay, so I would be more reticent about this if, look how price has been moving. Okay, if we just had these tight corrections and each one was a separate piece of its own, that would be quite direct. Okay, and that would be, a reliable sequence for a move to the downside, and that would imply that potentially price tapped into this area, this sharp move, and found enough liquidity, excuse me, to send it to the downside, but price didn't do that. It's moved down correctively. If we just take the bars pattern tool, Okay, you do have to read between the lines with Euro Kiwi because it can be a bit of a messy pair, but how has it moved down? Okay, let's analyze that. That is a corrective move to the downside. That is not impulsive by any stretch of the imagination, which gives me a clue once again that we're likely tapping into these sharp moves. Okay, what could be happening is we could be forming a middle section like so, which does something like that. Then we push down to this area, and then we have this 1, 2, 3 reversal structure, and I would actually prefer that, but obviously if you just count the candles, that would not be ready by the end of the day. We would have a 1, 2, 3 which taps into all of these sharp hook points and likely breaks slightly below, retests this sharp area there, and then moves to the upside. Okay, that would be my preferred option, but given that this is a daily forecast and I'm forecasting what's likely by the end of the day, what I'll be looking for is the following. Okay, so I'll be looking for price to tap into this area here. I'll be looking for price to tap here. Ideally, I would like it to tap into this here, retest the back end of that, because then we would have washed out more liquidity than if we just tapped into this area. And but regardless, I'll be looking for, if we break below here, below this low, this area of consolidation where we moved up sharply, which these sharp moves continually keep near missing too. If we tap into that area, I'll be looking for a 1 hour push up, a solid push up on the 1 hour chart. Then I will, if we start to correct on the 1 hour chart, so if we get one corrective 1 hour candle after the green, the bullish push up, I will drop to the 15-minute chart and I'll be looking for a 15-minute correction. Okay, so I'll be looking for a correction that I can filter with two tops. Okay, if we get the two tops, what I will do is I will set a reduced risk entry order on the break of the flag, while simultaneously I will drop down to the 5-minute chart to see if I can get a risk entry from the bottom. Okay, so I'll be looking for this two-touch correction, and if we get it, then I'll be looking for a 5-minute rejection where price taps into that low, and then I'll be looking for either a retrace or a low test candle to break back above. If it does, I will look for the entry within the flag like that, which will give me a greater risk to reward. If I was to get it, I would cancel the order which I placed on the break. Okay, and if I don't, I will just leave the order that I've set on the break and let price trigger me in. Okay, if we get those two tops. Okay, now one of the reasons I'm waiting for that and not waiting for a risk entry from the edge is because I'm looking at the sequence. Okay, if you just analyze the sequence, so when we tapped into here, okay, how did we move up? This is not the greatest of sequences. Okay, so if we just analyze the overall sequence using the bars pattern tool, okay, so how we moved up all in all, that's not the greatest sequence. Okay, so when we don't have a great sequence to the upside, I always wait for price to tap into the area and I wait for a push up in the flag as opposed to trying to call the bottom. Okay, and the same is true on the flip side. So that is my thought process. That is Euro Kiwi, and as I say, I would prefer that structural approach, but if we don't get it, that's absolutely fine. So I have got, and just to touch on it, up to this first inflection point, so we have a sharp move up followed by a sharp move down. So if this entry manifested itself as a first target, I will be able to manage this up to this high, this first high, for something in the region of 3.5%, just in case price came back down to test the low or formed something more complex. And then what I would do in this instance is I would use the mechanical management system, which has just come out within the Falcon community. And if you're a member, you'll know what that is. If you're watching this on YouTube or on TradingView, then if you would like to know more, there is a link on my profile. There's a link on my YouTube profile where you can find out more about the community of which I'm a member. The mechanical management based system, which is why I've got my arrow to there. What I would do and how that would work is what I would do is I would take the Fibonacci tool, which I've customized, and I would measure the range. So from here to here. So when we have this is mainly about not giving back too much profit to the market. Okay, that's the whole point of this, is that when you've got a fairly big risk to reward up to the first like solid target, so if we got all the way up to there, I would have something in the region of 10 10.5% profit to work with. What we typically know is that price will often fill the 90% mark, okay, of a range is where price can pull back sharply. Even if it's going to continue to the upside, it will often near miss. Okay, so people that were looking to sell here get FOMO, and that's one of the reasons we get the sharp pullbacks. And it will often pull back 50% of the range, even if it is going to continue to the upside. And of course, there's some people that take profit in this area. Some people take profit a little bit too early because they fear it retracing from the area of value where they were looking to get out. So if they were looking to get out here and it gets close, a lot of people close their positions out of fear that the market will just retrace against them, which becomes a bit of a self-fulfilling prophecy, and that tends to happen around about the 90% mark. So what I would do in this instance is I would set a take profit, okay, at this 90% mark. If we got the entry, which would give me something in the region of 9.22, and I would simultaneously be trailing my stops at the same time. And then if I was able to trail them all the way up, and we didn't get sharp pullbacks, then the take profit was hit, then I would walk away with something in the region of 9%. And one of the Falcon community did a survey a little while back on what people's biggest problem was in trading, and the number one thing was greed. The number one reason that people were failing in trading was greed, according to this survey. And so a lot of people would look at this and go, they would look at what I've just said and say to themselves, well, why wouldn't you let it, why wouldn't you just hold the steep pullbacks and let it keep going? Well, one of the things we're trying to do in Falcon is we're trying to manage our trades, even if we're trading smaller accounts, as if we were trading £1 million plus account. And the reason being is because you could say to yourself, okay, well, I'll hold through all these steep pullbacks. I'll let price retrace 50% of the move, which would mean that I'm now running at, and it could pull back even steeper. I'm now running at 4% profit instead of 9%. And I'll just leave that open in the hope that it continues to the upside. That's fine, but would you be mentally able to do that, given that trading is a psychological game? Would you be mentally able to do that on a £1 million plus account? Okay, who knows? Okay, now the problem is that if you're able to do it on the smaller account, and then you find that you're not able to sit through these steep pullbacks on the larger account, then what's going to happen when you've upgraded your lifestyle? Okay, you're trading that massive account, you're living in an expensive house, you're driving an expensive car, you've got a family to feed, etc. What happens if you find that once you're trading the big account, you're not mentally comfortable with holding through these deeper pullbacks? You're now going to change your trading, and it's going to be different to what brought you profitability in the first place, which in itself is probably going to cause you a great deal of anxiety. So wouldn't it make sense to trade the way on a smaller account that you would do on a larger account and get comfortable with that? Okay, build the practice of good habits before you're trading the larger account, rather than waiting until you're actually trading it and then finding maybe finding that you're not comfortable with that way of trading. So that's the logic behind this. Okay, these small gains cannot be sniffed at. Okay, so 9% profit, if you were making these and similar returns on a consistent basis, then if you're doing that on a £1 million account, you're not going to care whether you're holding through these steep pullbacks for these longer term moves. You're going to be thinking to yourself, yep, that's great, I'll bank that and move on. Okay, so don't let greed, which the Falcon survey identified as the number one downfall of most traders, don't let that be your downfall as well. Okay, don't trade like the masses. If the masses are losing to a large extent because of greed, then don't be doing the same. Okay, don't follow the herd, follow the money flow. And that's the thought that I'd like to leave you with. So that is Euro Kiwi. Of course, as I said yesterday, if I place a trade, I will update you with that. It doesn't matter whether it's a win, break even, or loss. I will bring you the result of that trade if it shapes up. If it doesn't, then I won't place a trade and there'll be no trade recap. So that is it, folks. I hope you've enjoyed this video, and providing I have a pair or pairs on watch, and if I've placed a trade, I will bring you another video tomorrow. Thanks for watching, folks. Have a great day, and I will speak to you again soon.